Lew and Meredith Jenkins share the title of Co-Chief Investment Officer for Carnegie Corp's $3 billion portfolio. The structure allows the duo to better manage risk as they make challenging each other's investment decisions a formal part of their process. It's working. The portfolio returned 15% between March 2013 and 2014, and 10% over 10 years. Lew and Jenkins talk about the opportunities for long-term investors.
We think about things as asset allocators across a whole portfolio rather than specific stocks. And so when we look at the world over the next year, over the next couple years, first of all, we take a long-term view, and we're looking over 5 to 10 years. But we're also thinking about what we do over the next year. And I think it's kind of sticking to our knitting and not getting too anxious about being over or under-invested. In our case, really, in some cases, it's under-invested because the market has done so well. But being focused on taking money off the table when things are strong, but having cash for the esoteric opportunities that come up, and that's really what we have our team spending a lot of time on.
Yeah, and I think that the key thing that Meredith said, which we always keep reinforcing, is the fact that we're long-term investors. So while there are not a lot of opportunities or not a lot of low valuations right now, we think about what is likely to be the opportunity set over the next 5 or 10 years. And so we won't spend a lot of time angsting over the fact that valuations are crazy right now. We'll spend a lot of the time right now researching what we think could be good opportunities in the next 5 years. So we spend a lot of time thinking about what demographic shifts will do for the opportunity set, what changes in healthcare will do. Are there different frontier or emerging markets that might be the next opportunity? So we think of it that way. So maybe they're not great opportunities in this minute, but they could be over time. And it's a better use of our time to do that than to worry about this moment, because we can handle the volatility of this moment because we're long-term investors. One of the things that we found interesting is that one of our long-term managers had spent a lot of time recently sharing with us the concept around the fact that they thought that the fact that women were entering the workforce in a lot of the Middle Eastern countries and a lot of the African countries in ways that they hadn't been before, and that cultural shift was going to be as big a geopolitical, have as big a geopolitical impact as some of the things in that area of the world that people are worried about. But really, when you think about what it will do to the country when they enter the workforce, when they're increasingly more educated, the demands and the expectations of women because of that, it's going to create opportunities, and it's probably going to dismantle some of the existing infrastructure. And so we spent a little time trying to think about what that might be. And so we've not concluded what it is, but that's what we're looking at.
And hearing that from the one manager really resonated because we had heard it a little bit in Japan as well and in India. And so it was a theme that actually resonated across the portfolio. So it sort of made us mentally check, oh, we should spend more time on this, because this really, even though it maybe sounds small and we heard about it in 1 or 2 different places, it actually can apply across the portfolio and have a real impact across the portfolio.
One of our biggest challenges is the fact that we run a $3.2 billion portfolio and we have a staff of 7. And in order for us to outperform and to create alpha, we have to go to increasingly more inefficient markets, which means that we're global. And we're looking for esoteric opportunities. And covering the world and covering every asset class with 7 people is challenging. And so finding clever ways to be efficient and to leverage people and leverage our networks and leverage the information out there is really important to us. So we try to build really strong relationship with our managers because they help us think through ideas. We build really strong relationship with our peers in the community. We try to have a diverse set of networks, not just foundations and endowments, but we look outside to other people, family offices, pension funds, to get a sense of how they're thinking about the market, and so that we can leverage all this information to point us in the right direction. And quite honestly, because we try to be contrarian, we also want to know where everybody's looking so that we can look in the other direction.